Hey, it's Ryan from the Option Income Advisor, and today's trade analysis is focused on Nvidia. Obviously, a very widely held stock. You guys probably own some Nvidia in your portfolio. And so you kind of have probably seen the trajectory of what it's done just recently. It's kind of gone parabolic here. We'll look at the chart here in a second. But really, this video is about establishing buy zones and sell zones for the stock, right? This is a stock that you want to be in, but do you want to hold it into this crazy valuation that it's kind of gone into, or is there a way, especially if you're in an IRA account where you're not getting penalized, by taking gains, it's important to kind of look at these different levels, to take advantage of these moves, and then also just buy in lower, right? It's a stock you want to own over time, no question. And if you're sitting on huge gains, we can talk about what to do. With that as well in a taxable account. But let's just get right into the chart, because bottom line is this thing has gone, very parabolic just recently. So just since kind of early October, the stock's up about 50%. And you can see how this chart is kind of played out. It's if you look at these moving averages, so the blue line is the 50-day, and then the pink line is the 200-day moving average. And so you can see this gap just widening in these two moving averages. So that obviously shows like some serious momentum as this stock has gone and done what it's done recently. And these gaps between, the actual price, which is right around $300 a share right now, these gaps between the moving averages are huge as well. And so these are kind of concerning just from a momentum standpoint, and then we'll kind of look at valuation as well. I mean, this is really just a valuation momentum. It has nothing to do with the fundamentals of the company, in general, because I think it's a company you want to own for a long time. I mean, between the new Metaverse, that I think the reason why this run has happened so fast, it's just kind of an overreaction to this whole Metaverse arena they're talking about. Clearly, their chips are going to be powering gaming and all these things that will be in the Metaverse, and so I see and I get the logic why you would want to potentially buy the stock into that, but it's just gone up too much, and from a valuation standpoint and momentum standpoint, things are starting to look a little crazy. So if you look at the gap there between the 50-day moving average and the current price, you've got about 21%. So the current price is over 21% higher than the 50-day moving average. That's a very large gap. And then the gap between the 200-day moving average and the current price is 38%. So this stock's currently trading 38% above its 200-day moving average. That's a significant gap between the price and that moving average. So again, those are just kind of some things to look at, from a momentum standpoint. And you can just see how it's interesting. It almost looks, based on this chart and how this thing has gone parabolic, that this stock traded in a range. But the funny thing is that this range is huge. Between this low point right here and this kind of like shorter term peak here, that was a 40% gain, right? So that just to put that in perspective, that gain right there was about as big as this gain. But just because of how much this stock has moved recently, and how again, I keep using the word parabolic, but that's kind of almost the textbook definition of parabolic. So just to kind of keep that in perspective, I mean, this stock does make huge moves. It makes huge moves, but then it also comes down, right? And so that's kind of what I'm thinking is going to happen here. So we're going into earnings. I mean, the bar is set extremely high. So let's talk about just valuation and kind of where I think the ranges could potentially be. So I think that'll be helpful, kind of going into earnings and even post earnings, right? Just to kind of look at your portfolio and kind of see what the stock does here. And so if we're looking at just from a fundamental standpoint, we've talked about this stock before. We actually called it kind of a never sell stock. And what that means is you want to own this thing long term, but there's definitely ways to trade around your position over the long term to kind of benefit you, and you can use options to do that, right? You can definitely utilize put options on the low end, and we'll get into some prices there. And then you can use call options on the high end to sell covered calls on to kind of exit through, your position as it goes, goes much higher. So, this is a stock that, again, has a low value rating, which means the valuation kind of stinks right now because it's so high. And then momentum is a 10. Obviously, we just talked about the momentum of the stock, but the safety is also a 10. So safety is built on, just historical operating, sales and revenue growth, balance sheet strength, cash balances, things like that. So obviously the company is a very strong business from that perspective. But the strike zone, and again, this is the Option Income Advisor platform, but we have a strike zone on every single stock. So the strike zone takes into account the volatility profile of this specific stock and basically gives you a margin of safety of where you would want to sell a put, right? And so the strike zone that we're looking at here is kind of between 225 and call it 265, right? Just broad range wise. So if you think about that, that's 15, 20% pullback just to get to the high range of that. And that's kind of a normal kind of pullback for this type of stock, especially after a move that it's made. And so that's kind of the area where we're going to be targeting from a cash secured put standpoint. What that means is if you do end up selling some of this stock, or if you were looking to build a position in this stock over time, you're not buying it at 300, right? You're waiting for a better price. And what the puts allow you to do is essentially set a limit order at a lower price, keep you patient, keep you, consistent with, your thinking. And that if the stock does drop to that level, you're going to buy it. But you get paid to take that obligation. And so we'll kind of walk through some of that as well. But I think the big analysis here is really comes down to valuation and kind of where this, where the projections for this company really come out. And so right now at $300 a share, we're trading at 64 times forward earnings. So that's a very, very healthy multiple. Yes, this company has extremely high growth prospects, but if we're looking at it, and we can look at actually the numbers. So this company reports in their fiscal year ends in January. So this current fiscal year is actually 2022. It's January of 2022. And so if we look at 2023, so 2022 numbers are $4.17 a share, which is right here. So 2023 numbers are up to about $4.69, right? So here, right? So it's not a huge jump from what's kind of being projected. And then that's what this forward earning multiple is built on. It's built on this 469 number, okay? So the stock at 300 is trading at 64 times this 469 number. But if we look out to 2024, we're looking at a 538, right? So, still kind of almost flattening out from where it's gone. Because, this did have some revenue pull forward from pandemic type demand. So this is really just kind of almost flattening out. The curve's kind of flattening a little bit. Obviously, it still has a nice trajectory there. But if you're looking at 2023 numbers, that's only a 12% increase. And then the 2024 numbers is only a 15% increase. So when you look at a stock that is trading at this kind of multiple, right? We're talking about 64 times. It's only growing, say, 15% a year, right? Because it's gotten so big, right? Obviously as earnings have grown, it gets harder and harder to increase earnings at the rate that it did, historically. And so this number right here, and just looking at these growth rates, obviously makes you think that this is an extremely healthy, maybe even high multiple for, a stock like this. So, look, these are the type of charts you want to see. But again, this is just a pure valuation standpoint, and where do we want to buy and sell this stock potentially in the future? And so when I look at, if I'm looking at a sell zone, I'm just going to do some straight math on the valuation numbers, right? And so based on this 469 number, and the reason I'm doing 469 because I'm actually just looking out over the next 30 days. So we're going to look at some option contracts over the next 30 days that kind of match up with these buy and sell zones, because these are levels that, hey, if it hit this level, for example, on the upside in the next 30 days, I think it's a sell all day long. And even in a taxable account, if you're sitting on a gain, I think selling at some of these prices, knowing that it could pull back 20-25% and you can get back in, I think it makes sense to kind of take some profits. And so the range I'm kind of looking at up here, if this stock gets to 70 times to 75 times, which is even, more drastic than the 64 times multiple, but, I could see it trading up a little bit potentially, after earnings. But I could also see, earnings being the catalyst that kind of makes it trade down. But if we're looking at this sell range, so that equates to about a 330 price up to about a 350 price. So that's kind of your 70 to 75 times valuation range based on forward earnings. Okay, so that's kind of your sell range is 330 to 350. So that's another kind of 10% to 15% of upside. And so selling covered calls at that level makes a lot of sense, especially for the next 30 days, because if you can get them in, before earnings, the announcement this afternoon, you're going to be able to get this nice premium that's heightened because of the earnings call coming up. So it can get pretty juicy. But that would be the range I'd be looking at on the upside. And then on the lower side, look, I think this stock's kind of always carried a pretty high multiple. It's averaged about a 55 multiple. So do I think this stock's going to come down to a 30 or 35 multiple? No, but I think it should be coming down from current levels. So if we look at, say, more of a reasonable, just kind of in that range of, say, 50 times to 55 times, that would be a range that I would consider potentially buying or accumulating more shares in, right? So in the 50 to 55 times range, we're looking at 235 to about 260. Okay, so that actually correlates with our strike zone. So I love seeing, a valuation number kind of target match up with where my volatility kind of calculations say, this would be a reasonable range in a strike zone for a cash secured put. If you recall, it was like kind of 220 to about 265. So it's right kind of in that range. And so this would be the level I would say would be a buy zone, right? So we've got a buy zone of, say, 235 to 260, and then a sell zone of 330 to 350. Okay, and so how do we put a position on, around our kind of core position if we are trading this? So let's look at the cash secured puts, and we're going to look at December monthlies. They're about 30 days out. And so remember, we were looking at, and you can see on this platform, it highlights obviously whether you not have earnings risk, and it also highlights whether or not the stock's in the strike zone. And so, or the strike price of this option is in the strike zone. And so our strike zone, remember, was roughly 226 to 265 or 263. And so you can see all of these that are now in the strike zone, and that's kind of where we want to target our potential purchase. And so I would say, let's just scroll down just a touch here. If we're looking at selling a put, certainly into earnings, I would probably look down into this probably anywhere, in this 250 to 260 range, maybe up to 262 there. But that looks like a pretty good risk reward, in my opinion, just looking at these. I always like to look for a delta on these under, say, 25. And so all of these options here in this range are kind of 15 and below. So that risk reward makes a ton of sense for me, right? We're looking at an average monthly yield of 1.4%. So just for taking this obligation to buy this stock at 260, and most of you listening to this video probably think, hey, if I could buy this at 260, I'd do that all day long, right? So what this does is you sell this 260 put, you're getting a 1.4% or you're getting 1.5% over 31 days, which equates to about 1.4% on an average monthly basis. And so you're getting a very nice yield on this. And that equates, 1.5% over 30 days equates to about an 18% return if you were able to consistently do this. But this is really about, again, just targeting levels that you might potentially want to purchase this stock, right? But you could go all the way down to the 250 and get 1%, which is about, again, a 12% average monthly yield. And then that's only a 10 delta. So, these two, this range right here between 250 and 260 gets you, between 1 and 1.5%, with margins of safety. So this is between the current price and this strike price, gets you a margin of safety of about 14% to 17%. So that means that the stock could drop, 14 to 17%, and you still wouldn't have to buy the stock if you were in this put position. But you're kind of targeting that level as a level you want to buy the stock at anyway. But you're getting very nice premiums to take that risk, in my opinion. And I think it's actually a very good buy zone for this stock to accumulate more shares over time. So I like that a lot for the cash secured put side. And then on the covered call side, the analysis we're looking at is kind of how much upside do I have left versus what I can sell the stock for. In the option and get a nice premium. And so I would say, again, we were looking at that kind of 330 range to 350 range. And so when I'm looking at this, we're looking at kind of average monthly yield versus upside profit. And so if we were looking at, say, this 340, you can get 2% yield, and there's $40 of upside in the stock, right? So that's kind of where this EPS, premium comes in. I mean, if you're sitting on this stock, why wouldn't you earn, if you could, another 2% just by taking this risk to have to sell it at 340, right? Over the next 30 days, right? This isn't into perpetuity. This is literally, you're taking a 30-day bet or risk that you would have to potentially sell this at 340. But you know what? If this thing goes up to 340, it's in this crazy zone of 70 to 75 times, next year's earnings. And that's a sell zone, in my opinion, right? So, you're going to get $6 per share to sell this covered call. So that's a very, very juicy covered call to be able to sell on a stock that's run up, this much. And what that gives you is an additional almost 15% of upside. So you get 2% of real cash, real income, but you have a 15% upside if the stock does go up. So it's a nice balance of maintaining, some of that upside, but also saying, hey, look, I'm going to target this level that I want to sell this stock. And maybe you're a little bit more conservative too. Maybe you say, look, I'd sell at 320, to be honest with you. Okay, well, go up to the 320, get 3.5%, right? Get $10 per share and give yourself, another 10% of upside, right? From where this stock's currently trading. So you can kind of adjust these levels to kind of your thought process, but I'm just kind of giving you broad ranges, right? So again, on the low end, our buy zone, just to recap, our buy zone, what do we say, is kind of in that 235 to 260 range, right? And then our sell zone is in kind of the 330 to 350 range. So those are the ranges I would be targeting on these options. And again, this is kind of just trading around your core position to either acquire more shares at a lower price, just knowing where the stock's trading at, and then also earning additional income. And the covered calls also give you a somewhat of a hedge, right? It's not a huge hedge given how much, how wide this stock trades, but look, it is a little bit of a hedge. You have a $6 hedge essentially. You're getting $6 per share. So it gives you $6 of downside protection, essentially, if the stock, moves a little lower. So it kind of serves, both purposes as a hedge, and then also, gives you a, chance to, sell stock through, through a covered call, eventually just taking some profits. At a kind of predetermined level. So those are our zones. Again, it's a stock I like for the long term, but this is just more of a trade to earn some income on a good stock over time, and acquire it at a good price, and certainly take profits when it gets a little crazy. So that's our trade. Any questions, let us know. Take care.